Okay, so let's just take, I want to take a blank sheet where we have not done anything. So first, you have to remember the basics, right? The basic is really extremely important. Structure is extremely important. No matter what tool you add, it's all about structure. Okay, it's all about structure. The 1, 2, 3 we talk about is in the reversal. It is actually a 1, 2 continuation, and I'll explain what I mean. Right. So let's just put the text. So price has been going up, and you get a reversal. Right. So the first time you mark a 1 is here, and then you get a 2. I think this is extremely important to grasp for Fibonacci. It will help you understand. And you have your 3. So price has been driving up. It makes a lower high. Then you say, okay, as soon as it makes that lower high, this is where I mark. This is where I want to start thinking about a reversal. It makes a 2, it makes a 3, and when you break the 2, this is where you enter, right? This has been the basic. This is a clear part. The reason why I say this is a continuation, it's a reversal from this move, but if you go like this, if you look from this line, let's just draw a vertical line. If you look from this red line right, you have a low, a high, a lower low, a lower high, right? It just keeps going. Think of it as this, as a continuation. This is now your 1. This is your 2. Does that make sense? From a continuation perspective, right? Continuation is always the first swing in the direction that you're going. That's your 1. Your 2, when you break your 1, you're entering. So it's the same, right? 1, 2, 3 as a reversal, or you wait for that reversal to be confirmed and then you say 1, 2, and I enter. It's the same entry point. Right? A reversal is nothing but a continuation after price has changed the direction. Okay, so if we have this basic understanding, what Fibonacci does is it makes a prediction when price is moving in one direction, how much is it going to pull back before it resumes going in that direction. That's all what Fibonacci is about. So when price is driving from here to here, how much does it pull back before it resumes up? That's all Fibonacci is saying. And so remember I said green to green is the sweet spot for me. For me, this tells me if it pulls back way deeper than that zone, I'm less comfortable to take a trade. But if it pulls back within that zone, I'm more comfortable to take that trade. That's all what green to green means to me. Okay, so the idea is in a trend from peak to peak, how much will it pull back before it resumes direction? So that's all what Fibonacci is. So you can keep doing it every peak to peak. You can keep doing it, right? So how much does it pull back? Again, it's coincidence, right? The way I drew it, but again, it pulled back to 61.8, right? Green to green, and then it resumed. So if you keep doing that, right? Before we even talk about when do you redraw it, when do you extend it? Here we have peak to peak, right? This is the idea of that green to green. It came down. It tried to bounce, but it did not live long, right? So it just kept collapsing, and it actually went way below this red line right? The first time it fails, even if I have taken this trade, I'm not taking another trade because I know now we have a lower high, so it's not a position that I'm interested in because we're starting to breach. The green to green was good the first time, but it never cleared, right? It didn't give us a new high. Therefore, there's no more trade in that direction. So I will take this now, and when I redraw a new one, again, it's peak to peak. Peak to peak. How much did it rally in the downtrend? Green to green, it rallied somewhere there. Okay, I can take a trade. And then once this is done, you repeat the cycle, right? It's always peak to peak. It's not peak to the middle of the line. It's not middle of the line to the peak. It's peak to peak, right? So you have a valley, you have a peak. You have a valley, you have a peak, right? It's always from swing point low to swing point high, or the other way around, swing point high to swing point low. So peak to peak, you draw it. Oh, okay. Again, it's green to green. I'm okay taking this trade. So this is all what Fibonacci does. Is it helps you predict before the move is made. Before the move is made. When it's like this, you say, okay, I have 2 points to draw from. I have 2 points. Where would I be interested to take a trade if this pullback holds? That's what you're doing with the Fibonacci retracement. Is if it goes between 23.6% to about 70%, you can say, okay, I'm confident it will resume. If it breaks that, it's not resuming. That's all you're doing, right? So you go from one swing to another swing. And as price develops, you see, oh yeah, this was actually right. Again, it's all about probability, right? There's no crystal ball. You can't say, oh, just because it touched here, there's no guarantee it's gonna make a new high. But it's all about stacking the odds in your favor. You're looking at, okay, what's a nice place to enter? If I see green to green and it makes a reversal, I can enter. Let's not even worry about, do you enter here, here, here? Let's not worry about that for now. Let's just get the idea of that Fibonacci retracement, what it means, and then we can start adding like additional candlestick patterns to say, hey, okay, now it bottomed here at the 61.8. What formation do I look for to be confident to enter? So before we get there, we really have to understand this Fibonacci retracement. So as price makes its move in any direction, we draw it, right? But remember, you're drawing in the direction you want price to go. So if you start from down high, that means you're expecting price to go up. If you're expecting price to go down, you don't draw it this way because then the number is wrong. If you draw it this way and you get 61.8, it's 61.8% of this move, right? It has pulled back that far. But if you want to go to the downside, but you're drawing your Fibonacci the wrong way, right? From here to here, it's not 61.8% retracement. That's actually 38.2, right? It has to go all the way up here. So this doesn't make sense. So remember, you start the fib drawing in the direction you want to go from that peak to the next peak. In the direction you're going. That way you can see, okay, this is a reversal point. I can take it. Once I take this trade, I take the next one. Right? So the next one, I come here again from this peak. I go from this peak to this peak. I have taken this trade. whether you take the trade or not is irrelevant. It's just knowing, okay, I see it, I didn't take the trade, but what's the next one setting up for me? Then I come here and draw the next one. So this is, you see how it's tied into the basic? This is why we did that first step, learning the 1, 2, 3s. Price moves in one direction, it takes a breather, it resumes that direction. It takes a breather, resumes. It takes a breather, has a difficulty resuming, so it collapses. Right? Whether it's going up or down, it's the same concept. So let me pause for questions.
Yeah, this part I think I understand pretty well. I'm gonna you just and then we draw the next peak or the next.
Okay. Okay. So that's we're good so far?
Yeah.
Okay, good. Okay, so now let's draw this one. Let's say before let me just move this. Before we see anything here. Okay. So chart has just started to pull back. We don't know how far it's going to pull back. So we know we have two swing points, right? We can clearly see swing points. So we draw from here to here, and we see, okay, so price is continuing to go down. I don't know where it's going. It's continuing to go down, and it does its thing. So for me, where I redraw it is based on how far this pullback is. If it's a shallow pullback, I don't redraw it. By shallow, I mean if it's like this, right? It does not even go past the 38.2. Then I keep the anchor, like the starting point, and I move the higher point. This is what I do. If it does not clear to the right, it's not to the left, because at this point, of course, it has cleared, but that's not what we're looking at. So here now, because it has cleared at least the 38.2, I'll say, okay, I don't redraw it anymore, right? So if I'm like this, I say, okay, I don't redraw it anymore because this has now cleared 38.2 from this move. So I just say, okay, I delete this. I start fresh. I start fresh from here to here.
Sorry, so what is it that you cleared out? You don't increase 38.
Okay. I think it's a good question. It's a matter of preference. What I have seen is if price did not have a deep enough pullback, if it's shallow, that price is going to continue to make a lot of highs, and redrawing from every shallow point just makes things more complicated for me personally. So that's why I prefer, if it clears this, it's deep enough, I want to consider a new pullback. If it doesn't, if it's like this, I'll just keep it and just keep moving this up. I keep moving it up until I get this cleared. It's a matter of preference. There is no, you can look at 100 fib trainings and you might get 100 different answers, right? Because
for that one,
yeah.
So for that one, now that it did clear,
Yes. So what I do here, technically the way I do it is I just move this here and I move this to the next one. This is the same as, okay, it was here. It was here. I see cleared. Delete, start over, right? It's the same as that. So here again, it has cleared, but it didn't make a new high, so I cannot draw this from here to here because now it failed to go to make a high. So at this point, I know because I have a lower high, my drawing, I want it to be the other direction because now I'm making a lower high. So what I want to see is this a fake lower high and price is going to resume back, or is this downtrend really going to go down? Because if it fails to make a new high, right, it's below the side, failed to make that new high and it's going down, and let's just say this has not cleared the 38 because if going back to the drawing or redrawing, so it failed to make a new high and then it makes a low again. When that low is made, I push this again, it failed to make a new high. I just keep moving this, and at this point I have nothing, right, because this has not turned yet. So I don't move this here because I don't know the turning point. I need to see a clear turning point, right?
Doesn't it do it at the second valley?
No, here.
Yeah.
Here it hasn't turned. The future, I don't know the future.
Yeah. But even after the second, so if you look at this
Here? Yeah. Yeah.
if you
So first here, right? First this one.
yeah.
It did not clear.
Yeah.
Second this one. It does not clear because the 38.2 is up here. Yeah. Yeah, because what you're doing is instead of looking here, you're looking here.
Yeah.
Always look forward, right? The past is gone. Once this point has moved, all of this is just a reference point, right? So yeah, and then you move here, and because this has not yet turned, I just wait. If you combine your 1, 2, 3 with this fib, it's beautiful. Like when you're here, when you see a 1 already and you see a 2 and you see that 1 has not cleared this 38.2, you see a 2, you see a 3, you'll just take it at 3 because you're seeing lower high. You can take it right here. You don't even have to wait for, right? Our basic training says wait until here. You don't wait for that because the fib is telling you these pullbacks are very shallow. They're struggling to pull back, right? They're really struggling. It's very shallow. Then you can be comfortable. But if they're deep, then I'm not clear what I want to do, right? I'm giving you lower highs, but there's some buyers pushing price up. In this case, right? Price is pushing down, but every time it gets to a certain level, buyers step in and push it up. Are they going to win the battle at some point, right? That's why I want to be a little bit careful. But if these are shallow, the buyers are not there. The buyers don't exist. It's just short covering when these are shallow. Short covering. People are just taking profits because they went short up here, maybe somewhere. It comes down here, they cover, so it has a very shallow pullback. Then they enter again here, they cover shallow. So, but when others step in, when we get to that green to green zone, that tells me there is fight happening on both sides. And so this is where I make some decisions on how I want to enter that trade. But I think more than worrying about entry right now, we just focus on if we draw it, if we understand the drawing of it, the next step will be taking action, right? But before we take action, we have to understand the concept and why price does what it does. And the reason why I start on the monthly is the monthly kind of sets the tone. Which way am I heading? And so far, for example, in this ETF, which started in 2011, in this ETF, if you look at low to high, we are pulling back green to green, right? So it doesn't mean price is collapsing, because we're still in this zone. If price decides to go from here to here, we have another problem, right? It's not a problem, but it's another scenario. But until price does this short term, yes, it's a very fast moving pullback. How far is the pullback? We don't know, right? That's why I like to look at the monthly. Tells me, okay, overall direction, it could still go up, but short term, I'm going to take advantage of what I see. And so when you see this long term this way, you have some options to make it, no pun intended, like you can think of, what do I want to do with this move? Typically when I see something big on the monthly, I'll also draw this one, high to low. I'll draw it in a different color so it makes it easier to see. And let's go to the weekly. So this high to low on the weekly, and as you see it making lower high, lower high, lower high, right? So you can start taking advantage of those moves and see how deep of a pullback is that. It makes it easier if we just go from here to here. 38.2 is breached, so you go from here to here. 38.2 is breached, so you keep moving this when it's breached, when it's not, right? So you just keep moving along the way. Here it might be one where here's 23.6 and here's 38.2, so that's also breached. So you just keep moving this down. You just keep moving this down. So when you see the weekly, then it's okay. Monthly, big picture, we're in a pullback, right? Not necessarily a reversal. Monthly, big picture. Weekly, this deep pullback we're seeing in the monthly, how do we take advantage of it, right, until it decides to reverse? Daily, again, now I'm going against the monthly, but remember we're pulling the trigger on the hourly, right? So but I'm not going to go against the weekly or the daily. I might go against the monthly because I want to take advantage of this big move. And this big move, the weekly fib, right, by drawing it, every time I see a lower high, by drawing it pick to pick, I'm taking advantage of that. And so when I come to the daily, again, I'm just staying aligned to what the weekly and the monthly fibs are telling me. And by leaving that monthly, this thick dotted dash lines, they're the monthly levels. So when I see, okay, we're at the 61.8, could we come to the 70 or the 78.6? If this gets breached, I know even the monthly is now collapsing. That's why I like to keep them here for viewing. So it's multi-time frame analysis, but looking at just one time frame. That's why I keep them. And so when I look at the daily, again, I'm taking advantage of that weekly swing. So every time I make lower high, I'm drawing my fib, right? It's breached, daily fib, so it's breached, so I draw it again. Now this could kind of look like, because we breached the 78.6, it could look like a reversal, But reversal again, remember this is just the point where we are making now a higher low. This is our 1, and we're waiting for that to end the 3, so that is not happening, so we're not taking a trade, right? There's no reversal on this one, but it looks like it could be a reversal. So when that doesn't happen, then we come here and draw. Every time it gets breached, we're redrawing it to know where do we stand, and we break it. It looks like it wants to give us a reversal, right? We have a higher low. Here's our 1, here's our 2, but 3 then is below our 1, so that is broken. I hope you see that one. This is really clear here, right? This is very clear. When price comes down, this one that we were seeing. So here's our 1, right? Higher low, but then we get a lower high, which is good. 1, 2. No. So 1 here, 2 here, 3 here, for a reversal. For that's continuation. So when we come down here, no, sorry, it's this one. This way I got confused. It's this one. We have a higher low, right? So as soon as we have a higher low, this is our 1, this is our 2. So let's just mark it here. Here's our 1. Three is way down here, so it's no longer 1, 2, 3. And because I needed to see another higher low so I can break the 2 to go up. So that never happened. So you can still keep those 1, 2, 3s in mind, right? Even though this is broken, there's no entry, right? Even though it looks like the fib looks like it's a reversal. Remember, on the fib, if you go past 78.6, it's a potential reversal. So even though it looks like a reversal, the 1, 2, 3 has failed because we're not really making significant higher highs continuously. So then we just redraw our fib.
So you drop from the peak to the valley even in this scenario.
Yeah, in all scenarios, it's the turning points. And in this one, if we just remove everything else now, and we just keep this one, if you look at this one right here, the 38.2 never gets breached. So you'll say, okay, I'll just move this one here, but then it got breached here, right? So your new one then is this guy right here. This one gets breached, so then your new one is here.
You wouldn't draw the one earlier?
Which one? This one? Yeah, but yeah, I mean, you could see when there's not a lot of distance between these two, you already know, right? You technically you draw it because the chart is like this when you see it, right?
Yeah.
When you see it, it's like this. Yes, totally, you draw it. But when you're doing it after the fact, you already see that it's close enough. You know it has breached. So you draw this one, and then you just keep moving this. The reason you keep moving this is to know where is the turning point. Here it looks like okay, continuation. Your 1, 2, 1 never breaks, right? There's no continuation here. But if you had taken it early, say, hey, you know what? I came to 38.2. I broke the low of this bar. I'm going to take it to the downside. It's not a wrong decision. But know that sometimes you just have to cut your positions quickly not to exasperate the loss. So hopefully today's session has made it clearer on where I draw them from, why I redraw them, and at what point. Right? Let's not worry about entry yet. Let's just worry about, do I get the concept right?
Yeah, that was nice. That was a good lesson. I think for me at least, it's I understand it, but it's more just like probably repeating this video like 3 times, just so I don't have to rethink about everything.
Yeah.
But like not that it's be similar enough that not like require to go back and think every single thing. It's just familiarity.
Yeah. I think so. What I suggest you do is just go from the hourly, just draw them on the hourly first, understand that concept, and then we'll go into multi-time frame analysis. I think that one will confuse you, right, if you try to redraw them. But the purpose why I showed you this, I started with this monthly, was what's the overall direction? And even this tells you it's not a clear direction, right? It's not really clear. But the current direction on the monthly is still up. As far as I am concerned, this is still up, because we're still above the 78.6% retracement. Right? It's still up. However, this is a big move to the downside. So how do we take advantage of that move? Right? The moves that started here. How do we take advantage of this move? It's all about taking advantage of this move. You have a high, a low, a lower high. 1. Your 1 is here. Your 2 is here. Your 3 is here. You break your 2. You're going to the downside. Right? That concept remains. 1. Right? So you made a lower high. 1, 2, 3. And so you break your 2. You're taking a trade. Now what you're doing is, to see if there's an earlier possibility, you draw a fib, right? So that has been breached. So you draw a fib and say, look, how far is this pullback? And do I want to wait until it gets down here, or do I take a trade early? I'm not going into how you make that decision. I'm just saying the fib will help you, right? So once you understand how to draw the fib, when we go into pulling the trigger, and the reason why we're doing all this is we don't want to wait until this yellow line, right? So this yellow line is a difference of, we can measure it, like top to bottom is $4.35. You're not going to get all $4.35, but do you want to enter earlier, or do you want to wait until price has gone $4.35? That's why we use the fib, right? Even if we capture half of that move, or better, a little bit better. So if we say here's what we have taken, we get $3. And we don't get quite the $4.35, but we get $3. That's not a bad move. You can even exit your position and be a happy camper, right? Because you've taken it at the entry where a lot of people think this is where I enter. You can be out, or you can have smaller position. That's why, you remove 50%, 75% of your position when price gets here. Even if it fails to continue to go down, it doesn't matter, because your 25% position is at break even, so you've made money. So that's why we're going to use the Fibonacci to give us an indication where price can potentially turn. Where price can potentially, green to green is my turning zone. I only redraw it if it breaches the first green, but my turning zone is green to green. This is my sweet spot for me. If I see a pattern that we'll talk about down the road, if I see a pattern, I'm taking that trade. Because this has been breached, then after I take that trade, I redraw it. part of the reason why I like to read roses is it gives me a good target. My target is this purple here. This one. This one. And this one. This is my target. And so on the initial one, when I take this trade, here are my three targets. And first target got hit and price pulled back, right? Because I don't know if price is going to pull all the way back. That's why I take 50% of my position off. Now all three targets were hit eventually, but I don't know that, right? Hindsight I know, but I don't know. The next time I draw it where I started to circle. So when I take this trade, this is a beautiful entry because you have an upside down hammer. I don't want to confuse you, but this is a beautiful entry. One bar gave me two exits. You can't see it very clearly until I zoom in a little bit. This bar here, it opened here, it went all the way to target 1, 2 before it reversed. And the next day it went to target 3. So if you know target 1 I'm taking 50% position off, target 2 I'm going to take another 25% off, target 3 could go to 0, I don't care, but boom, target 3 hit. Do you want to get out of target 3 or do you want to be greedy and wait for more? Right? I don't like to wait for more. Like if I think that the market is very, very strong in one direction, I might have 5% position. Right? But I have already made my money. And when you're doing options, it gets pretty expensive very quickly if you want to start thinking, I don't want just target 3, I want 4, 5, 6 targets. Then you have to have very long-term options. And those are pricey. So Fibonacci gives you entry, gives you a zone to look at, it gives you exits. You're prepared to do this. The odds are in your favor. You take a position. If you don't like the position, you cut it. If you like it, you keep it. And in a few days, boom, you hit your target. Right? So this is now on the weekly, right? So this is not one day, this is 1 week that this has done. But if you put this line here and you go to the daily, so if you have somewhere here was your entry, so if this on February 11th was your entry, on February 24th, 13 calendar days later, you've hit 2 of your targets, right? And your third target, boom, you hit it a few days later. Now the trick is, this entry was on the 11th of February. How far out is your option? If it's a month out, it's pricey because we're using the hourly chart. I don't want to go a month out. If I'm using the daily chart, I might go a month out, but on the hourly chart, I don't want to go a month out. So I'm not waiting for all those things to happen. See, even if you go on the daily, your entry is much sooner. You're not entering here, you're entering somewhere up here much sooner, or here. And so it gives you exit 1, 2, you're taking those exits, you're not waiting. Alright? Make sense?
I think so, yeah.
Easy, right? It's actually easy, but it takes time to practice.
Yeah.
Yeah.
Are you, if I remember, you use the things like kind of like your the support as well, right? How do you reconcile that with your actual support
So
on the actual chart, like visually?
yeah, so let me show you something. Let's go to a weekly. First, let's draw this. Let's draw some support and resistance lines. Right, just a few. Just a few, doesn't have to be exact, right? So now, when price is here, right, somewhere here, like this. When price is like this, right here, it's moving up and you have a higher low. So you're drawing your fib from low to high. You want to use these areas as support. What happens? Look at the line that I drew earlier, and this line. That's your support. Right? Very close enough. Here, look at it. It's using it as support here. Yes, you probably have redrawn it, but those lines hold. So every time you draw it, you redraw it, you see the 23.6 and the support line that you drew, they come very close together. So that's why on my charts you don't see support and resistance line, because the fib gives me a dynamic support and resistance that's close enough. Right? It's not, I'm never looking for exact turning points. I'm looking for a zone. Somewhere in this vicinity, something is going to happen. That's what I'm looking for. And so I use those fibs in that way. And there's more stuff that we're going to keep adding to make your life simpler. We're going to keep building on. Once we grasp the fibs, we have the zigzag, the fibs, support, resistance. Once we understand that, we go to the next level. What other indicators do we have? By indicator, I don't mean adding something from the indicator list. Like, what other things can the price action tell me where price could potentially turn? Because price is king, right? Price does everything. When you start adding moving averages, RSI, whatever, they are lagging. They calculate after the fact. But price tells you right now, this is what I'm doing. So that's why I like price.
And is volume going to play a big part in next week?
So yes. Now when price pulls back, right, heavy pullback, and the volume dries up, that's a good indication that price is done pulling back. But if the volume stays consistent, see in this case, if you look at this volume bar, the volume stayed consistent. Even the bulls did not have a strong volume, so that tells you there is no conviction on the bull side, and then the bear starts to pick up volume again. So but here in this area, as you can see, these pullbacks, they don't have a lot of volume. I have an average line, and the volume of each of these is not above that average line, so I know, okay, these are shallow pullbacks. I can confidently enter these trades. But when I see something like this, heavy to the downside, this happens to be up at the end of the day, but it was heavy to the downside, and then the next day is a good volume, then I can say, okay, this is probably a good area of reversal. So that's where volume comes into the picture. But let's just get the zigzags and the fibs down. Sometimes you can almost ignore the volume. Yeah.
Is there a quick, easy way to add volume into our chart?
Yes. So when you go to indicator and just type volume, there's that here. Or you can go to setting. I think on setting there's a place where I use my own, a lot of my own indicators, so I forget where these settings are. So here, volume. You can add this volume. They're different, right? So this is built-in volume, which I think I've said hide. That's probably why you're not seeing it on here. Yeah. But that's how you add it. So you can either add the built-in volume.
Where is the, how do you add the built-in volume again?
So if you go to setting, the gear icon, and then on the status line there's volume.
And where does that show up in the actual chart?
It's not showing down here for you.
No.
It's only showing up here.
Yeah.
I think there's a way. Yeah, I just have to remember. Because I think I do something to my volume where I don't want to see it. But if you go to indicator and just type in volume, that's also an easy way to add volume right there. I think I know. I think they made some changes. Okay, got it. So this volume and the gear icon is just to add volume up here. It's to add volume to the status line. It actually says status line, right? Which makes sense.
Yeah.
But the other volume is down here. And now you can move that to a new pane below, or you can keep it here.
Okay.
Yeah. But I built my own, so I don't need this one here. But it's close enough. What else?
General incentive.
General market sentiment. You know, I want the market to go down some more.
The downside.
So again, my monthly has told me this is not that deep of a pullback. However, we're really starting to see lower lows. I mean lower highs, right? Continuously making lower highs. So when we're making lower highs continuously, like this, right? It's like, okay, there's still room to the downside. The only time you know this is over is when the lows go above the previous low. And if we turn here and make a new high, then we're reversing back. But until then, we're making lower highs, we're going down. That's why you take advantage of it, right? So in this move down, I want to take advantage of it. Right? This is very, very close to 38.2. I might even ignore this one and just say, hey, I don't want to redraw it. I'll just do this one. But here, now we've gone all the way to 61.8. If we get another low, I'm redrawing it from here. But until then, this is the last one that I see.
So what action would you take down if you didn't have the next point?
So
The latest.
right here, when I've drawn this and price comes to the 61.8, the very next day I open below this inverted hammer, I have already taken a put position. I actually took this put position.
Until the next 3.8? 38.
No, so this put position target is down here, remember?
Yeah.
But this is daily, right? I didn't take it on the daily, so I've already I was already in and out of that position. But this is why I took that position.
Option position or?
Yeah. I don't like margins, so I don't do shorts. Puts give me it's the same play, but leveraged and no margins. Yeah. So you keep making lower highs, you can take those positions. Right? You keep making lower highs.
Is this like your actual working chart?
Yeah.
Ones that go across, your fib too.
Yeah, these ones. Yeah.
Yeah.
It depends on where I'm drawing them from, right? So depending on the monthly. So the monthly, I've already drawn it, right? This is the monthly. The thicker ones are the monthlies. I've drawn this on the weekly. This one I just drew today to show you, but so I can just do this. Then because it's color coded for me, I know. Then when I go to the daily is again in the short uptrend because we have our 1, 2, 3s, right? So we have higher low, right? That's 1, 2, but then we made a lower lower low, sorry, from this one, but it's still above this, so I can just say, hey, here's my 1 again, my 1, 2, 3, here's an entry. So the daily is still in an uptrend. The tricky part about this one is it's breached the 78.6. So that daily is not happy yet. But if you look at the weekly, right, the weekly which has gone all the way down here, it touched about 70% and it reversed, so that gives you a good signal to go down. So when you start to combine them, it can get confusing, very, very confusing, because some you draw it up, some you draw it down. You just have to really be comfortable of each time frame and what your plan is for each time frame. So just a quick refresher. I look at my time frames by times of 5. So 1 hour times 5 is 5 hours. A day bar is 6.5 hours, so I say those two are about the same. 5 hours, 6.5 hours. 1 day times 5 is 1 week, so a daily bar and a weekly bar. 1 week times 5 is a little over a month, but I just use a monthly chart. So that's how I look at my charts, and then I make a decision based on what is the general direction for everything has pointing in the same direction is the best scenario, except for the hourly, right? You want the hourly to be opposite of the other three because that tells you I have a pullback, now I'm going to take a position to go in the same direction as everybody else, right? If everything is pointing up, I'm not entering. I need a pullback. But when you have the monthly and the weekly going in opposite directions, I will take a look at that and say, okay, on my hourly, I'm going to go in the direction of the daily and weekly just for short term. Right? I just want to be in and out. It might be like 1 or 2 days instead of waiting for a week for that position to develop. Instead of waiting for this targets 1, 2, 3 to hit, if I take a position and it's not lined up with the monthly, I say, you know what? If I enter at 38, I'm exiting at the 0 line. I don't want to wait until I hit full target, because this is short-term planning that goes against the broader market time frame. But markets turn, the lowest time frame turns first, right? So you have to keep that in mind. If, when everything is up, the hourly will go down before the daily, right? And then the daily follows, the weekly follows, and eventually the monthly follows. But for the monthly to, like in a strong uptrend, for monthly to reverse takes a long time. And same for monthly downtrend, it takes a long time for it to fully reverse. Right? Very, very simple reason is, if we're looking at the last swing, low to high, right? This is, if you're looking at this, so the high is 22 months, right? And it's not going to collapse in 1 month, 2 months, right? It's going to take it time to continue to do that downward movement. But in the meantime, your hourly, your daily, your weekly, they're starting to show you, right? I'm making lower highs. I'm making lower highs. Do you want to take advantage of me while you wait for everything to line back up? But those should be, when you're going against the monthly, or even if you say, okay, monthly is okay, against the weekly, very quick, right? You're in, you have your stop loss, your exit put in place, you go do your work, and the system will take care of it. Right? You're not waiting to hit targets. Like you say, okay, if my option makes $1, I'm out. Right? $1 means $100 per contract. You do 100 contracts, that's a lot of money. So $1 seems small, but we're talking about multiplying your position size when you start to get comfortable and you start growing your account. Right? I'm not looking at making $1 million today, but I'm setting up my account to make $1 million a trade. Right? That's how I'm looking. That's how I think about my account. Just because I'm not there today doesn't mean I'm not getting there. But I'm positioning myself to say, I want each position to make me, a large amount. Right? So how do I get there? Is I have to start taking risks appropriately and growing my account so I can increase my position size. If you get greedy, then you're going to take too much risk. It might work 5, 10, 20 times in a row, but then that 21st time is going to wipe out everything you've gained and your original.
Nice. That's a really good lesson. Good game.
Yeah. Very good.